China. What is happening with China, guys? My Owanda ticker CN50 USD. I think maybe there's an ETF mchi or shcomp. Those familiar with the Chinese market index probably know exactly which one. But I look at all world indices, keep an eye on them, and China is giving signs of going back into stage one, guys, on the monthly candle chart. So here's some monthly defined support. Tested once, bounced back up. Here is some monthly defined resistance right smack on it. Precise right there, right there. And here's some for maybe a bigger pattern if ever we get all the way back there. So in this sideways move in this stage 4 decline that's been there for a little while on the monthly chart, down, one leg down, huge pullback, and February's not over yet, but right now you are above it. So if the price action closes above the 12-month moving average, even if it's declining, you can't short it anymore. That's the first step. It's the first bearish technical check mark that goes out the window. You might still have a declining 12-month moving average, so you can't go long. You might still be below horizontal break line, important breakout line, so you can't go long yet. So those, when you have a mix of bearish stage 4 checklist and a stage 2 checklist, then you're either in a stage 1 or in a stage 3. So usually you name them stage 2 going up, stage 3 at top, stage 4 down, and when you go back, you call that a stage 1. So this looks pretty much like a stage 1 that's beginning, unless you get a wick. Unless this price action during the month, for some reason, for the next 2 weeks, it closes, and then we just end up as a wick here, and the body, we have a green body or red body, depending how low it closes, below that 12-month average, and then that wick is what we consider noise. That intraday noise, intra-week noise, false breakouts, especially here, tuck, hey man, it's gonna go to the moon, and then you enter here, but finally it closed below that break line. You gotta really respect that. Okay, even here, very nice, whoa, I don't want to do that thing. There you go. Even here you have a nice pattern right here. Tighter and tighter, coiling, and then poof, exploded, and then you'd be on 1, 2, 3, 4, 5, 6, 7, 8, 9 months later in a crazy uptrend, and then back down. So what we're going to do now, we're going to go in on the weekly. Let's check the health. Let's check the checklist. Ooh, let's see what's happening. Okay, a lot of Ichimoku cloud defined. Scribbles. Adios, scribbles. Adios. Bye-bye. Okay, we're still below whole bunch of Ichimoku cloud defined resistance right there. Very hard to go long when you're not out of it. That's what happens when you have V-shaped recoveries or V-shaped bounces. This doesn't have time to dissipate. So all this price action that stayed here, those are buyers that when the price action goes back up, they've become sellers. They want to break even. They've been losing for a while. They just sell, and that's that red Ichimoku cloud defined cloud, and that comes back from one of Stan's tenants. No close overhead resistance. Well, if you use the Ichimoku cloud, it kind of visually shows you where that resistance might be, guys. My monthly, the lines. Okay, monthly defined support pretty much coincides also with my weekly. There's no volume, guys. Where's my volume? A few weekly defined breakout lines, embryonic pattern, driving the price upwards, closing above that, then until you start hitting more meaningful monthly defined resistance right there. 30-week average is, it's declining. Okay, let's go look at the details right there. Okay, This is pretty cool. Starting to slow down. It's underperforming this PX. Here, right here, green, right here. 30-week moving average inclining, price action below 30-week moving average, and outperforming this PX. And I think now we're still, where's my MA? MA is still growing, going up, but the SPX is outperforming you. So you don't have, Stan always wants you to have the best of the best. So why go long China when you have the SPX that is outperforming you? So we're not quite there as an A++ setup. Plus, you have the other weight of evidence. Like I said, we're below that monthly defined support. Still declining 12-month resistance. Still declining 12-month moving average. And get that resistance over here. So this is typical stage one. You need time to figure things out. You need time for those sellers to get out of the picture, give up. And after that, you'll have clear coasting ahead to really explode, really have a nice stage two. You see how it is here? You're out of the cloud. Price action went down below, create that overhead resistance. All of that here, projected in the future, create that overhead resistance. And you could have said, oh, look right here. I'm going to the moon. Close above inclining 30-week moving average. Okay, still severely underperforming the SPX. But he said, bring that price back down. But the positives, that you were staying above the 30-week moving average, you were angling it upwards. And after that, when you were above that monthly defined support, you had that great launching pad right there out of the Ichimoku cloud. Then you were outperforming the SPX. And here you had, that's what you aim for when you do Stan Weinstein stage analysis. And that would have been great. It would have been outperforming the SPX. We made more money than the SPX. The pullbacks were never really threatening the 30-week average. It was really a beautiful, beautiful stage two that China had. Never challenging the trend line. 1, 2, 3, 4 tests, 5 tests. It was just beautiful. You would have exited right here, half your position. The rest you would have exited at the close right here, close below the 30-week moving average. And by that time, you had indications here that you're trouble. Look at that crazy red volume right there. Is that the candle right there? Yeah. So that candle, huge red volume, bad sign. And then you're starting to underperform the SPX. And that's all she wrote. So you enter here, you exit here, and that's your... that's how Stan Weinstein maximizes those inclines and declines. So same thing here. Before we get in that situation, we have to go through all that cloud. It's there. Monthly defined. Support turn resistance. Where's the damage? Oh, red candles, green. But there's no breakout volume. I don't see... I'm not quite sure indexes if they require it, but right now there's no breakout volume right here. So that's what you want to see. You want increased interest. You want, hey man, this is something special. This is going to go high. I don't want to miss out. I'm loading up. Institutions loading up. I just want to see if here we had... This is queuing the... there we go. So here's my breakout volume. Yeah, not quite. Stan wants twice the average of the previous 4 weeks, but that's based on his observation of stocks. So I'm not quite sure if a CFD covering an index, if it's able to generate that type of volume, twice the average. But maybe you had 20% more, twice, 30% more, but not twice. So that's one of the Stan's confirmations checklist that would have been absent for that upride. So am I expecting too much to see volume increase? I would like to see the volume increase, even if not twice the average, at least 20-30% more than the previous 4 weeks. A nice green candle right here, show me that there's interest. So we're not quite there yet. So this might need more time going sideways. Is that price action going to go back in the cloud, go back down, test lower levels, and then go down? Well, that's what we're going to have to wait and figure out, guys. And see if on the monthly, we get to close below that 12-month average, get back into that range. this will be considered like a false whipsaw action above that 12-month average, and then we resume that decline back down to these test these lower levels. So that's it, man. Stage 1 for China. Not stage 2. Still have a lot of stuff to do, and there are possibilities that the stage 1 fails and we go back into a stage 4 decline, guys. But we're not quite there yet. All this price action has to go back down the 30-week moving average and having a declining 30-week average. So until we get back to this level right here, 11,120 or 10, about these levels right here, 11,171, that's the MA. No man's land, guys. All right, China, let's see what you want to do next. See ya.